just a little over $10,000. That's the number I came back from when I went on vacation last week. Welcome back to another episode of Almost Wealthy. I'm John. I've been gone for about a week and a half. I didn't really log in. I checked the markets a few times during my vacation, but while I was away, my portfolio crossed 10K for the first time. Not because I didn't do anything, because the strategy runs whether I'm watching it or not. Before we go, real quick, I want to give a shout out to the 4 people who supported this show this month: Walter C., Anthony P., David A., and Mark F. I truly want to thank you for your donations to the channel. When you donate to the channel, you will get the exact spreadsheet I use for my whole strategy, the same bill stacking plan I'm following live on this channel. These 4 grabbed it, and that support is what keeps Almost Wealthy going every week. If you want to support the show and get the spreadsheet, the link is in the description. Thank you sincerely. I really appreciate it. Now, let's get into it. I need to explain something before I go any further, because there are 2 different 10,000 milestones, and they're not the same. The first one is the portfolio value, which is right at $10,000. That's what this account is worth at the current market price. That number crossed $10,000 while I was on vacation. The market movement got it there. The second milestone is the total investment. That is the actual cash I deposited in this account since I opened it in March. That number is $9,407.80, 592 away from $10,000 invested. Why does this matter? Because the phase system doesn't run on value. It runs on invested dollars. Phase 2 unlocks when I put in $10,000 of real money into my portfolio, not when the market lifts the value there, when I actually deposit it. I have $592 to go. Now let's go back to my holdings. Everything is all green. Let's go through each one. SCHG, I have 112 shares valued at $3,836. Cost basis is $3,558. Unrealized gains, $277, and that is 7.80%. It barely pays dividends. The quarterly payout is about 3 cents a share, and that's not why it's here. It's really here for growth. The bigger SGHG gets, the bigger the collateral base for my strategy. The bigger the collateral base, the more I can borrow safely over time. Right now, it's my largest single holding at $3,836. I'm up nearly $278 since I bought in. Next is SPYI with 48 shares. Current value at $2,607, up $74.55, and that's 2.94%. SPYI is the income horse. It pays every month. It generates income by selling option contracts on top of the S&P 500. The premium from those contracts are distributed every month in cash. So the yield right now on this is around 11.62%. SPYI is the reason the portfolio keeps paying me, even in the months when nothing else does. SCHD, 53 shares. Current value is $1,744, up $92.84, and that's about 5.62%. SCHD is the dividend growth position. It pays quarterly. It holds blue chip companies with a track record of growing their dividends over time. Yield right now is 3.25%, not the highest yield in my portfolio, but one of the most reliable. In a strategy where the goal is to hold forever, that really matters. GPIQ with 18 shares. Current value is $1,090, up $114, and that's about 11.68%. GPIQ has been one of the quiet best performers in this account. It's similar to SPYI in structure, holds an index and uses an option overlay to generate income. The difference is the index tracks the NASDAQ 100 instead of the S&P 500. NASDAQ has been very strong lately. When the NASDAQ has a good run, GPIQ picks up both the equity appreciation and the income. The yield on this right now is 9.13% with the monthly payouts. Last but not least, VYMI, 7 shares, current value at $724, up $47.89. and that's about 7.08%. VYMI gives me my international exposure. The rest of the portfolio is mostly US focused. VYMI holds high dividend companies outside the US and Europe, Asia, and emerging markets. The yield on this is about 3.42% with a quarterly payout. It kind of diversifies where my income is coming from. All 5 positions are up. My total unrealized gains was $606.88, and that is 6.46% on everything I've put in this account since March. Not bad for this portfolio starting from zero. Now, here's the part I want to focus on because the numbers are great, but the real story is that I did nothing. And here's what happened anyway. June 5th, GPIQ paid a dividend of $9.26. Showed up in my account while I was somewhere else. I didn't log in. I didn't have to prove it. I didn't even know it happened until I got back. Just appeared. And then my smart transfer kicked it in. It automatically gets routed towards the margin loan. So it starts paying down the loan. So that $9.26 landed and the system handled it. No decisions from me, no transfers to initiate. It just ran. The margin loan kept doing this thing. Meanwhile, I have $308.60 borrowed, 5.6% per year. That works out to be about $17.44 a year in interest, which is around $1.45 a month, or roughly around 5 cents a day. While I was on vacation, the interest cost on the loan was around 35 cents for the whole week. GPIQ paid $9.26. The loan costs 35 cents. That's the gap that I'm talking about. The income doesn't just cover the interest. It absolutely buries it. That's how I designed it. So far as what actually is coming in June. June is a quarterly payout month. 3 of the 5 holdings pay quarterly. I have SCHD, VYMI, and SCHG, and all 3 of them pay in June, on top of SPYI and GPIQ, which pays every month. So in June, everything is going to fire at once. But here's the full picture. GPIQ already paid me in June, the $9.26. SPYI is paying me June 18th, estimated at $26. SCHG is paying me in June, estimated at $14.20. VYMI is paying me in June, estimated $6.17, and SCHG is paying me in June, estimated at $3.46. $9.26 already landed, $49.83 estimated is still coming. That is my biggest dividend month this portfolio has ever had, and it's not even close. So here's the dividend history. March, I collected $32.34. April, I collected $24.42. May, I collected $29.89. June, right now, on track for $59.09. Previous best was $32.34 in March. June is going to nearly double that. And the reason is simple. March was also a quarterly month for SCHD, VYMI, and SCHG paid me then too. But the portfolio was much smaller. I had fewer shares. Now I've added shares across every position. More shares means more income when the distribution hits. Every deposit I've made over the last few months is showing up in this June number. That's compounding, working in real time. One more thing on SPYI. Today is June 16th, which is the ex-dividend date for the June payment. That means everyone holding SPYI today is entitled to upcoming distributions. It processes on June 18th. So hopefully I will be able to show you the $27 and the single largest dividend payment this portfolio has ever received, and it's 2 days away. And my lifetime dividends right now for my portfolio is $95.91. So let's go a little bit in detail on the margin. My margin balance is $308.66. My annual interest on that is 5.65%, $17.44. Monthly cost is around $1.45. The phone bill has been on this loan since phase 1 started. Every month is charged to the margin account instead of my checking account. Every month the dividend comes in and the automation routes them towards the balance of my margin. And the interest gets buried every single time. June dividends projected at $59.09. Annual interest rate on this loan will be $17.44. Again, 1 month of dividends covers the full year of interest more than 3 times over. I know some people see the word margin and immediately think it's risk, and I get it. Margin can seem dangerous if you borrow too much relative to your portfolio. A market dip can trigger a margin call. That's when M1 forces you to either pay down the loan fast or they start selling your holdings. For right now, the way I manage this is 12% LTV. LTV stands for loan to value. It's just the loan as a percentage of what the portfolio is worth. I never let the loan go above 12% of the portfolio value for right now. My loan is at $308.66 borrowed. My loan is $308.66 borrowed against just a little over $10,000 in my portfolio value. That's about 3% LTV, far below my 12% ceiling, and nowhere near the 40% where it would issue a margin call. For a margin call to happen at the current borrow level, this portfolio would need to collapse more than 90%. And that's not a realistic scenario, because if my account dropped 90%, we have bigger problems going on in this world. In '08, the worst financial crash most of us have lived through dropped the market about 57%. I'm sitting at 3% LTV. The math doesn't scare me. For me, there's nothing to worry about. So total invested, I have $9,407.80. Phase 2 target is at $10,000 invested. I'm about $592 away, 94% of the way there. June deposit so far is $300. Light month, I was on vacation and I didn't make the normal deposit before I left. But even with $300, I'm further than I was coming into this month. Normally, each check I do $250. So I invested $50 more. At $10,000 invested, phase 2 will unlock. What does that mean? The internet bill joins the phone bill on the margin loan. Right now, the loan carries 1 bill, the phone bill, which is around $98 a month. At phase 2, the internet bill gets added around $203 total a month on the loan, $2,436 a year. That stops leaving my bank account. And here's what happens to that money. It doesn't disappear. It gets redirected back into my portfolio as additional monthly deposits. $203 a month that is used to go to bills now will go to my account to invest. So that means more deposits, which will give me more shares. And more shares means a bigger dividend check and investing into growth. And phase 3 comes sooner because of it. And that's the staircase. You freed money from step 1, redirected it back in, and it built the next step for you. $592 away from that start. So here's where everything stinks. The portfolio is just a little over $10,000. My cost basis is just a little over $9,300. My unrealized gains is $606.88, and that's 6.42%. My money rate return since March is 9.11%. My total investment is $9,407.80, $592 away from getting to my phase 2. Margin loan is at $308.66. My monthly interest on that is $1.45. My margin health right now is at 95% in the green. June dividends landed at $9.26. June dividend income could be around $49.83. June total projected $59.09, which will be my biggest month ever. And my lifetime dividends for right now is at $95.91. The phone bill is still on the loan. The dividends still cover the interest, and my deposits are still going into the portfolio. While I was on vacation, the portfolio crossed 10K, and I didn't even touch it. That's the whole strategy. Subscribe if you want to follow phase 2. I post every week, real numbers, real portfolio, no fluff, and I will see you on the next one.